Foreclosures are shooting up. Is this a repeat of the early 2000s housing crisis? That's what we're going to cover in this monthly market report. This is for you if you're a real estate agent or financial advisor interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data you need to make an informed buying or selling decision or help your client do the same. Headlines do more to terrify than they do to clarify what's going on. The clickbait that's out there about real estate oftentimes misleads people. Maybe an article is factual, maybe the information is factual. But if it's got a clickbait type of headline that people who don't read the article end up misinformed with, and as a result don't continue with their plans to buy or sell real estate, then that would be a reason why headlines do more to terrify than they do to clarify. What's lacking in these headlines? It's context. And to illustrate the point, take a moment to recognize that I just hooked your attention using a headline that lacks context. One of the reasons you might be watching this right now is because of the title I selected for this video. But the reality is that I took it from an article just to illustrate the point. And you won't believe where the article is published. Here it is. Foreclosures are shooting up. Is this a repeat of the early 2000s housing crisis? This is a headline you can expect to see more of. It's true that foreclosure starts are up 49% month over month, according to Atom data. And while that's factually correct, it is contextually bizarre. Of course foreclosures are up. They have to be up because foreclosure moratoriums are now being lifted. But the point is that we are nowhere near the volume of foreclosures that we saw prior to the pandemic when life was normal. The fact that foreclosures are up shouldn't even be a talking point. That's a foregone conclusion. What's most shocking is that this clickbait-ridden headline comes from Realtor.com. And to the people on Realtor.com that are watching this, I'd like to ask you, whose side are you on? Is this a headline aligned with your mission statement? I think we can all agree that your objectives don't include misleading your readers and helping them make misinformed decisions. Here's a thought for you: rewrite the headline or just take the article down. When consumers see headlines like this, they get scared, they get concerned, and they don't move forward with their plans as a result of misleading headlines. Let's take a look at one that CNBC came out with. Mortgage originations will drop 33% in 2022 as interest rates rise, according to the industry forecast. If someone doesn't take the time to read into the article, they will miss that what they actually say is refinance originations will drop 62% next year to 860 billion. And that makes sense because in a rising interest rate environment, we'll see fewer refinances. However, they go on to say, mortgage originations for the purpose of buying a home are forecasted to rise 9% to a record 1.73 trillion next year. So the headline doesn't do anything to inform the buyer or even lead them down the right path. We see prospects seeing these headlines and thinking, I don't know if now is a good time to buy. I don't know if now is a good time to move forward with my real estate plans, and they end up not doing anything and to their own detriment. And that is why it's our job to educate our clients. Here's a report that I think really emphasizes the point. This is the University of Michigan Consumer Sentiment Index. And the question was, do you think it's a good time to buy a home? Well, if you look back at February of 2020, 70% of people said, yes, I think it's a good time to buy a home. Well, you move forward to September of 2020, a little bit less, 65%. And in September of this year, about only 1 out of 3 people think it's a good time to buy a home. One of the reasons being that people have been misinformed about what's happening in real estate. The biggest question that people are asking today is what's ahead for the 2022 housing market? I think it really starts with the conversation around mortgage rates. So let's dive right in and look at this quote from the chief economist at Fannie Mae, which says, right now, we forecast mortgage rates to average 3.3% in 2022, which, though slightly higher than 2020 and 2021, by historical standards remains extremely low and supportive of mortgage demand and affordability. So what does this mean? Well, just like most of the other experts are projecting, we're seeing a projection for increasing mortgage rates. We've seen that even over the past few weeks as mortgage rates have on average ticked up above 3%. So as mortgage rates rise, it will cost more to purchase a home, and that's exactly what we've been talking about with regards to affordability. Mortgage rates, prices, and wages are the 3 levers that affect affordability. So if mortgage rates rise or are projected to rise, it will cost more to own a home. But the greater context here that I love about this quote is the piece about historical standards. If mortgage rates are ticking up a little bit, it will cost more, but they will remain historically low. based on projections, and that will support affordability. When I started in this business 16 years ago, I was offering a 30-year fix at 6.5%. If you talk to someone that's been doing this for even longer, they will tell you about double-digit interest rates. So the fact that rates might be 3.5% instead of 3% is laughable. All round, that's great news for buyers, but what we still need to help buyers understand is that financing a home now is better than later since mortgage rates are projected to rise. So let's take a look at what the mortgage rate data looks like. This is data from Freddie Mac and its average mortgage rates going back to 2018. What you can see here is that mortgage rates were roughly just under 5% in 2018 and they've dropped pretty significantly since then. We hit that kind of all-time low last year and they've started to tick back up again. And so what people want to know is, where are they headed? Similarly, as we saw in the quote before, you can see Freddie Mac is saying mortgage rates are projected to rise as well, roughly 3.6% by this time next year. And if we average out all the projections from the major players, we see roughly 3.5% mortgage rates by this time next year. So as mortgage rates get higher, it becomes more expensive to purchase a home, and that's what we want to help prospects understand. Now, what we also know is that mortgage rates aren't the only thing that are going to rise next year. Home prices are forecasted to appreciate as well. So what you're looking at here is the home price forecast for 2022, and as we look at the 6 or so major experts and what they're saying, they're averaging out to about 5.1% appreciation next year. Now, what does that mean? Well, we've seen and we've talked about over the past year, home prices have appreciated at a record-breaking level, 18, 19, almost 20% appreciation. So next year, the forecast is showing continued appreciation, but at a slower or more moderate rate. And you've heard me use the term deceleration last month, and that's really important to be able to communicate to our clients. Home prices are expected to continue rising, but at a decelerated rate, which means slower or more moderate growth. So how do we apply that in conversation? Well, it's going to get more expensive to purchase a home, and we want buyers to be able to purchase before home prices rise even more. But why are they projected to continue appreciating? Well, we still have that inventory challenge next year, but likely softening because builders are coming back to the market, building more homes, and more sellers are taking the plunge and listing their homes for sale. So what does this mean for buyers? Well, of course it means buy before prices and mortgage rates rise to maintain that affordability. But what does it mean for sellers? For sellers, it means that home equity will continue rising, and that's a huge factor. We've talked about record-breaking equity over the past year, and equity will continue rising as home prices rise. So what we want to make sure that potential sellers understand is that if they're thinking about making that move 2 or 3 years down the road, maybe even sometime next year, taking action now will help them leverage their equity, make that trade up or that downsize, whatever it is that they're looking to do, while they can still lock in that low mortgage rate and take advantage of the forecasted home price appreciation in 2022. So as you can see, we can have educated discussions with both potential buyers and sellers and the reasons as to why they should take action now. So as we think about mortgage rates rising, prices rising, what does that mean for home sales next year? Well, home sales are forecast to increase this year and perform well again in 2022. So what you're looking at here is the home sale forecast from 4 major entities. That's Fannie Mae, Freddie Mac, the National Association of Realtors, and the Mortgage Bankers Association. And in 2021, it looks like we'll end the year at roughly 6.7 to 6.9 million home sales, and then next year potentially even exceeding that. The reason this is so powerful is that if you look at last year, we sold 6.5 million homes in 2020, and that was record-breaking. So we're projected to exceed that this year and next year, which is fantastic news and means that the forecast is really going to be strong going forward. So what we need to do is help homeowners realize the advantages of selling now, helping buyers understand the advantages of buying before mortgage rates rise and prices rise as we go into the spring. So to sum things up, 2022 should be another strong year for the housing market. That's a quote from the Mortgage Bankers Association. And it's a great setup for what's ahead based on what the data is saying and what experts are saying. 2022 really has the potential to be a blowout year. So that's a wrap for the November monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month, but before you go, if you're looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for watching. Bye for now.